your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion. Delivered by conflicting media reports, we connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly. 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
Well, I do have a great team when it comes to developing a financing plan or plan to save you money. I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, of course, we're celebrating today. We celebrate every day on Ron Siegel Radio. You know, this is one that's for old people. I know, Josh, you might even be on the cusp of this one. National Newspaper Carrier Day. I never did this, but I have a lot of friends that had bike routes, and they would go out there and they'd deliver the newspaper on their bike wee hours of the morning. Then they'd have to go and collect for the newspaper when people were actually awake. That was when there was newspapers actually had content. You remember Sunday paper? Nobody could, it was a massive thing. It was, 3-4 pounds of paper. I don't know whether they're trying to save trees or nobody reads the papers because all the information in there's a bunch of baloney, but I still do get a paper, I admit. Not because I want to. My son is a big-time fan of high school sports, and I don't know why, but he likes to get the newspaper just so he can see how his teams are doing. He watches it all online. He's got everything he could do on his phone, but Newspaper Carrier Day. Now I see... the paper sometimes it's 8 o'clock in the morning, 8:30 in the morning, they're delivering. Who's reading the paper at 8:30 in the morning? Aren't people working? Oh, sorry. Schools have to start late now so kids can get more sleep. Like that doesn't mean they just go to bed a little later. It does. The government thinks they can control everything. I saw this more. Well, it's California. I got to. Josh, you're going to love this when you're out there in America. You may not have this in America. In California, The latest thing that's going to the governor's desk is by 2032, they want your car to start beeping if you're going 10 miles over the speed limit. Kind of like your seatbelt beep. Can you say nanny state, boys and girls? Let's go back to what I want to celebrate instead. National Spice Blend Day. That's an interesting one. My favorite now, and we might have talked about this yesterday even, Trader Joe's, the everything but the bagel spice. Of course, I'm a biggie on garlic. Some of those look kind of, I like spices, not spicy. So if it's that cayenne or even tahini gets a little too spicy for me. Yes, I know I'm a wimp. So let's get into something a little more fun. Today's National Macadamia Nut Day. So our question of the day. Do you like macadamia nuts with or without chocolate? Sometimes you feel like a nut, sometimes you don't. I like mine going directly to the source. That means a trip to Maui and picking up chocolate-covered macadamia nuts. That's kind of my favorite right in there. So question of the day, do you prefer your macadamia nuts plain or chocolate-covered? Put it in the chat for us. Hey, if you're watching us live, and yes, I see there are a bunch of you watching us live, just say good morning, say hello, let us know you're alive. We like to interact with people. So question of the day is, do you like your macadamia nuts chocolate covered or plain? Moving right along, let's see what's going on in the markets right now. The Dow Jones Industrial Average now up 27 points. S&P 500 is down 4. The NASDAQ is down 8.5. Oil down 51 cents a barrel. And the 10-year Treasury, our favorite right there, is down about 5 basis points, 3.79 right now. That's some big information right there, because that one does not directly, but it indirectly deals with mortgages. It does directly have an effect on your home equity lines of credit. And I did notice just yesterday, I was chatting with some folks about my favorite loan, the Home Select loan from Geneva Financial, rsrhomeselect.com, rsrhomeselect.com. The interest rate dropped again. So clients didn't have to do one thing. Their rate just dropped over what it was last month. So you got to love that one when you get that little surprise when your monthly statement comes out that your interest rate dropped. You did absolutely nothing other than listen to Ron Siegel Radio and listen to the fact that, there's a benefit to having that Home Select loan. Rates dropped. Now, be aware, we're down about a point from when we really started promoting the product. And now, but that doesn't affect as much the effective interest rate. We talk about that EPR all the time, the effective percentage rate. We're still seeing those loans going through anywhere from 1 to 3%, 3.25% on a 30-year loan. That's not the interest rate. It's the effective rate, because you're paying interest first, or you're paying principal first. If you want to get a scenario on it, doesn't take a lot for us to create a scenario for you. All we need is all persons on the party, what their current take-home pay is, and a current mortgage statement. We'll give you a comparison. Will we save you money? I don't know. The only thing I can tell you is I've done a lot of scenarios and simulations in the last couple of months for people. So far, I've never seen one that did not save at least $50,000 in interest. Now, there are some people, $50,000 in interest is not meaningful. To me, it is. I don't have the money of our politicians who are out there talking about charging for everything under the sun. But, you get that idea of just go out there, save 50 grand, put that to work for you over time, get your mortgage paid off in 8 months, and still have the line of credit. That's the biggie. Still have the line of credit for the remainder of the 30 years. And if you listened to our broadcast yesterday, I shared with you how sorry we are, how empathetic we are for the people. I saw that the governor just declared a state of emergency late yesterday in Rancho Palos Verdes for all those folks that basically have homes, no electricity, land shifting. And if the typical 30% of them have no mortgage, that's over 40 people who have no mortgage, so they've got a lot of equity tied up in their house. If you have the Home Select, or if you follow our $18,000 a month plan for retirement income, just using a mortgage, you're not getting that benefit. So give us a call. Let's chat. And I'll share with you, and once again, that's why we went and got together with the Certified Liability Advisory Group. And you can get a copy of our book, rsrlinks.com/YCLA, rsrlinks.com/YCLA. Get a copy of the book. It's free. Give you an idea why you want to have a certified liability advisor on your area, on your household board of directors. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, we've got a great broadcast lined up for you. How the Federal Reserve's next move could impact the housing market. Ways to save on credit card interest. Is buying a house with a sibling a good idea? We'll tell you how to do it the right way and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numero 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
As the economy slows, do you know anyone worried about job loss? At Siegel Lending Team, we offer the Home Select Loan. Think of it as a financial superhero cape for homeowners with good income and credit. It not only saves your home, but also throws a life ring to your credit score. Because who needs stress when you can have peace of mind? Let's secure your future with a smile. Visit rsrhomeselect.com. rsrhomeselect.com. NMLS 217037.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make that call, 800-306-1990, 800-306-1990. And yes, of course, every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. What did the rates do yesterday? Conventional 30-year down 6.344. Jumbo 30-year fixed up 6.737. FHA 30-year fixed down 6.107. VA 30-year fixed up 5.833. USDA 30-year fixed down 6.097. That's our rural friends, generally no down payment. Those are the numbers that you put into the mortgage calculator. They don't include APR, points paid, points received. We don't know that data because OBMMI does not give us that data. But if you want our report, our thoughts on what's going on in the market, rsrlinks.com/market minute, rsrlinks.com/market minute. What's happening in the markets today? Well, let's take a look. The S&P 500 is now down 1.9. We're looking at that one for you. We're looking at the 10-year Treasury. We've told you a little bit about that already, but let's see where it's at as we speak, because we like real-time data. So we've got the 10-year Treasury down 5 basis points, 3.79 right now. The mortgage-backed securities, remember, that is the bonds. The 10-year Treasury, we're telling you the yield, the interest rate. The mortgage-backed security, we're telling you the bond. That's what gets put into the formula to create mortgage rates. That's up 11 basis points. Whenever the bond goes up, rates go down. So that's up 11 basis points. We like that information. What's driving this? Well, in addition to what we already shared with you on our morning update, and I'm not going to go into that right now, but you can get that. Again, you can get it for free. All you have to do is register for it. rsrlinks.com/market minute. rsrlinks.com/market minute. But in addition to that, because this wasn't even out at the time, the JOLTS report, job opening and labor turnover report, that came out. Job openings fell from 7.9 million to 7.7 million. Now, we got to throw a little bit of a caveat in there, because the 7.9 million was a revision down from last month. So last month's numbers came out. They said, oh, we were wrong. They were actually worse than we thought. Now they're 7.9. Now we go down to 7.7. And the last month was revised by 330,000 people or jobs. Comes in far below the estimates. The bean counters, the economists, they thought we were going to be looking at 8.1 million job openings. Zooming out, the level of job openings is moderated and is down 12.5% from last year. This is the lowest number since January 2021 and is approaching pre-COVID levels. The hiring rate rose to 3.5% from 3.4%, which is still near the slowest level since 2013, not counting COVID, and not far from the COVID low of 3.1. Quit rate was reported at 2.1%, which was unchanged from the previous reports. The reading of 2.1 is the lowest level since 2018, again, removing COVID. This shows weakness in the labor market, as lower quit rate means less people feel confident about getting a new job, and they're not being poached from other companies. Bottom line, there is more weakness in the labor market as there is less hiring, less quits. See, people don't quit their job unless they think they can get a better job, better pay, better something. Well, the bottom line there is, we might not want that. Let's see if tomorrow's ADP comes out, what that shows, and Friday's BLS jobs report also show weakness. If they do, the Federal Reserve may be cutting 0.5% instead of 1/4. ICE reported their home price index, showing that home values rose 0.2% in July and are now up 3.6% year over year, down from 4.1 in the previous report. Remember, that's a national number. I've been looking at some. I just looked at yesterday in the Bakersfield market. Their 63-year rate is like 5.29%, and the 5 and 10-year rates of appreciation are even higher than that. So be aware that when we come out and you hear these numbers that home values rose 0.2% in July and are now 3.6% for the year. National numbers. You don't live national. You live in a house, on a street, in a community, in a zip code. Well, if you want that report, we can get that report for you as well. We can tell you all the way down to the zip code of every home for sale in the United States. Our friends over at Altos Research, they track every home for sale every week in the United States. You can get that report for free from us, rsrlinks.com/market report. rsrlinks.com/market report. Again, it costs you absolutely nothing. And I think I put up a post just recently on one of our social channels. If you think that education is expensive, try ignorance. You think education is expensive, try ignorance. It's even more expensive. So be real careful with not having this data if you're thinking about buying or selling a house. And we are getting ready to do some work for a new real estate firm that's coming into the marketplace. They've been in a lot of the country already. They're not in California. They're coming here fourth quarter, and they've got a lot of great tools for real estate professionals. If you're thinking about selling a house, you want to know data, rsrlinks.com/market report, and you want to have a real estate professional that really understands how to market your property properly. Try and say that 3 times fast. We're already talking to some of these agents so that they can become trusted partners with Ron Siegel Radio. So if you want to see some unbelievable marketing tools for selling your house at the very most money, this is going to even take, I might even have to redo the video, because those of you that are regular listeners to Ron Siegel Radio or watching us on social media, I've already put out a process for maximizing the sales price of your house. You can go and check that out, rsrlinks.com/salesmax, rsrlinks.com/salesmax. We show you exactly how, through marketing, to get the most money on the house you're looking to sell. Now, there are people that don't subscribe to the same methodology that I'm sharing with you. But I think if you watch some of these things and you watch some of the tools that are coming out from this new company that's going to hit the market, this new company, I'll share some statistics, but they were like one of the first companies to hit 10,000 real estate agents that have their license hung with this company. The fastest to get to 10,000. Fastest. 25 months to get up to $1 billion a month in real estate transactions. Some of their stats are just staggering, and they haven't even hit California, which is obviously the biggest state in the union. What do you think is going to happen when the real estate agents in this market start getting on board there? Now, that doesn't mean that we don't have great agents that are not with this company. Yes, we do, because we know the great agents. I have a list in my computer of about 8,000. Now, there's like over 1 million agents in California. But I've got a list of about 8,000 that do significant business. They're the ones that I recommend just because they're out there doing it every day. It's not the ones that are like me, who have had a real estate license, I don't even know how many years. But I'm not qualified to do a transaction. I had to get it because of leading a lending team that was with a company that was regulated by the Department of Real Estate way back when. So I got a real estate license. Have I ever written a contract? No. Have I ever, well, I've reviewed many of them because of the lending team. But if I wanted to try and go, and if somebody asked me what's in paragraph 17 and explain it, no idea. And with everything that's changing right now, it's getting even more important that you have somebody that's got massive amounts of training. If they're not getting trained on a regular basis, the company that I was just telling you about that we might be doing some promotions for, they did in 2 weeks 50 hours of training for their agents. 50 hours. Because the laws changed, or the rules changed. I shouldn't say the laws because I get mad at people when they say the laws. The rules changed of real estate and they were implemented the 17th of August. It's all based on a big lawsuit that was settled, or that came down in October of last year. And the implementation date of some of these new rule changes was August 17. Well, if you're dealing with an agent that doesn't understand these things, you might be missing out. You might be getting some bad guidance, and it might be very costly because ignorance is not a protection from the law, right? Just because, that's why I say if you're trying to sell your house on your own, same thing. Just because you don't know the law doesn't mean you don't have to follow the law. And if you're not following the law with all the disclosures and whatnot, you can get sued and you could lose lots. You're listening to Ron Siegel Radio, discussing your real estate. Oh, I guess I should have said Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. I guess I rambled on a little bit. I got on my soapbox there in the Mortgage Minute. When we come back, how the Federal Reserve's next move could impact the housing market. 7 ways to save on credit card interest. Is buying a house with a sibling a good idea? We'll tell you how to make it successful and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. How the Federal Reserve's next move could impact the housing market. Now that it's September, all eyes are on the Federal Reserve, the Fed. The overwhelming expectation is that they'll cut the federal funds rate at their upcoming meeting, driven primarily by recent signs that inflation is cooling and the job market is slowing. Mark Zandi, chief economist at Moody's Analytics, said they're ready to cut just as long as we don't get an inflation surprise between now and September, which we won't. unquote. But what does this mean for the housing market? More importantly, for you as a potential home buyer or seller? Why the federal funds rate cut matters. Fed funds rate is one of the key factors that influence mortgage rates. It does not set them, it influences them. Things like the economy, geopolitical uncertainty, and more also have an impact. When the Fed cuts the Fed funds rate, it signals what's happening in the broader economy, and mortgage rates tend to respond. While a single rate cut might not lead to a dramatic drop in mortgage rates, it could contribute to the gradual decline that's already happening. Mike Frattoni, chief economist at Mortgage Bankers Association, points out, quote, once the Fed kicks off a rate-cutting cycle, we do expect that mortgage rates will move somewhat lower, unquote. And any upcoming federal funds rate cut likely won't be a one-time event. Lawrence Yoon, chief economist at the National Association of Realtors, NAR, says, generally the rate-cutting cycle is not one and done. 6 to 8 rounds of rate cuts all through 2025 look likely, unquote. The projected impact on mortgage rates, here's what experts in the industry project for mortgage rates through 2025. One contributing factor to this ongoing gradual decline is the anticipated cuts from the Fed. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490, FM 98.1 video feed, you're seeing a graph that shows the latest forecast from Fannie Mae, MBA, National Association of Realtors, NAR, and Wells Fargo. And you're seeing mortgage rate projections. All of them seem to be heading in a southbound manner. With the recent improvements, I'm not going to go through all the numbers. It's if you're listening to us on any of our syndicated radio programs, you can catch the replay and all of this data right there on any of our social channels. RSR on YouTube is where we have a lot of the live folks who are watching RSR on YouTube, or you can go right into our Facebook page, Ron Siegel Radio on Facebook. But I do know that we get quite a few watching on the YouTube channel. And it's got all of the rates, where rates are, where they've been, what they're projected to do is all there. With recent improvements in inflation and signs of a cooling job market, a federal funds rate cut is likely to lead to a moderate decline in mortgage rates. Two big reasons why that's good news for both buyers and sellers. Number one, it helps alleviate the lock-in effect. For current homeowners, lower mortgage rates could help ease the lock-in effect. That's where people feel stuck within their current home because today's rates are higher than what they locked in when they bought their current house. If the fear of losing your low-rate mortgage and facing higher costs has kept you out of the market, a slight reduction in rates could make selling a bit more attractive again. However, this isn't expected to bring a flood of sellers to the market, as many homeowners may still be cautious about giving up their existing mortgage rate. Number two, it should boost buyer activity. For potential home buyers, any drop in mortgage rates will provide a more inviting housing market. Lower mortgage rates can reduce the overall cost of home ownership, making it more feasible for you if you've been waiting to make a move. What should you do? While the Fed funds rate cut is not expected to lead to drastically lower mortgage rates, it will likely contribute to the gradual decrease that's already happening. And while the anticipated rate cut represents a positive shift for the future of housing market, it's important to consider your options right now. Jacob Channel, senior economist at LendingTree, sums it up well, quote, timing the market is basically impossible. If you're always waiting for the perfect market conditions, you're going to be waiting forever. Buy now only if it's a good idea for you, unquote. Well, I will tell you, I'll give me a minute. Bottom line, the expected federal funds rate cut driven by improving inflation and slower job growth is likely to have a positive, though gradual impact on mortgage rates. That could help unlock opportunities for you. When you're ready, give me a call, 800-306-1990, 800-306-1990. And we did put out and that's the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. We put out a report for you, and I think I've got the link to share it with you. Josh, didn't we do one what's your number? rsrlinks.com/what's your number. I think we did that, and maybe I'm just not finding it. But what we wanted to find out from you is, what's your number? What's the number that makes sense to you to refinance? And take a look at that right away. And why do I say to do that? So what's the guidelines or the guidance here? Don't look at interest rates. They don't mean a whole heck of a lot. Try to go to the grocery store, buy a car, buy gasoline, buy clothing, go out for a nice dinner with an interest rate. It is worthless. Dollars and cents. That's what's important. Okay, Josh found it. rsrlinks.com/what's your number. rsrlinks.com/what's your number. So the interest rate is worthless. What we like to look at is, what if we could save 5 or 10% on your mortgage payment and save at least 3 years on the duration? So if you've got 27 years left, we want to go down to 24. If your payment's $5,000 a month, we want to go to $4,500 a month. If we can do both of those things as a liability advisor, don't you think you're in good shape? Now, we've also got tools that'll show you, hey, what happens if we do all that and we continue making the exact same payment with a lower interest rate? Because again, the interest rate matters, but it's not our most important component. It's the dollars that matter, because once we have the dollars, we can do a whole lot of good stuff for you. So what we want to find out is, what is that number? What is the number that would make you excited? We get you started right now. We get your loan application in. We make sure that we've got you tightened up. We've got everything done. We set the interest rate in there that is what makes sense for you. And then once that's all in place, then all you have to do is say, go, we're ready. Or we'll actually say go for you, because we've already talked to you. We've already got your approval. We already know where you want to be. So once we do that, you're in good shape. And we look at, now, let's just throw us some numbers just for fun, because we want to find out where we have to be. So I looked at this number and I say, okay, if I'm able to save, go from a 7.5% interest rate, and if I then go to that's going to give us principal and interest payment of $52.44 a month. Now, if I get that down to a 7% interest rate, $52.44, that's not quite enough. So we got to go to 6.75. So we go to 6.75 on that interest rate. Okay, we go from $52.44 to $48. So that's $400 a month. Now, if we take that same $400 a month and we apply that to our payments as extra payments, we're going to cut our loan down to 24.1 years. Just think about that. 30-year loan goes to 24.1. Those are the type of things that we do as a certified liability advisor, because we can give you this information and then you can use that to make an educated decision. How are you going to go about these changes? How are you going to go about helping your financial future? The certified liability advisor, the focus is how to create wealth through proper liability management. That's why I give you the book for free. rsrlinks.com/YCLA. rsrlinks.com/YCLA. Again, when we give these things to you for free, it's not because we just want to go out and make something and spend a bunch of money on creation. They're not free to us. They're free to you. We have to pay for them, but we give them to you because we want you to do better. I've never made money off this radio show, right? This radio show is an expense to us, but we've been doing it since 2010 to help educate the listeners and our audience so they can make better financial decisions, have a better future. Yes, we do make money from the lending team, but if you go and grab this book that we've got the link on there, does that guarantee you're going to do a loan with us? No. Does it obligate you to do a loan with us? No. The thing is if you go grab the book, you'll make better decisions, and we hope you'll see us as a trusted partner, and our team as trusted partners, so we can solve some of these issues for you. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial market part and and the financial markets. Reach me anytime off air number 800-306-1990, 800-306-1990. Ron Siegel Radio, Facebook.com/Ron Siegel Radio, Facebook.com/Ron Siegel Radio. RSR on YouTube. RSR on YouTube is where the live broadcast is each morning. RSR on YouTube. Or you can look at the replays. Ron Siegel 1, Ron Siegel the numeral 1 on YouTube. Make sure you hit the like and the smash the subscribe button on there for us. Helps the algorithms, help us get out to more people. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, the Borrow Smart segment brought to you by rsrhomeselect.com, rsrhomeselect.com. 7 ways to save on credit card interest with credit card interest rates at record highs. 22.84% is the average right now. You can easily end up spending thousands of dollars on finance charges each year. Here are some strategies to help you save on credit card interest. Number 1, pay your full balance during the grace period. Each billing cycle, depending upon your card issuer, you may have a period of about 21 days to pay your full statement balance and avoid interest charges on your purchase. The grace period applies as long as your previous month's balance was paid in full. If any part of your balance was left unpaid, the grace period does not apply. Fortunately, the other tips included here can help you save on credit card interest. If you want to make sure to pay your credit card bill the right way for FICO scoring purposes, rsrccpayment.com, rsrccpayment.com. Number 2, pay more than the minimum. The higher your balance, the more interest you'll pay. When you only pay the minimum, most of your payment goes toward interest, with only a small amount reducing your balance. Making larger monthly payments lowers your balance more and reduces the amount of interest calculated on your balance. Number 3, transfer your balance to a card with a lower interest rate. You can save on credit card interest by moving high interest rate balances to a credit card with a lower interest rate. Even better if you qualify for a promotional 0% APR offer. Many balance transfer cards offer this promotional rate for 18 to 21 months, which gives you ample time to pay down your balance and avoid interest. Be sure to factor in the balance of transfer fee and any annual fee on the credit card, as these can offset your interest savings if they're especially high. Number 4, ask for a lower interest rate. Your credit card issuer may be willing to give you a lower interest rate, especially if your credit has improved since card opening. You may not have luck with lowering your interest rate. However, if you are paying the penalty rate because of previous past due debt payments, you might benefit. Number 5, make your payments early in the billing cycle. You can save on credit card interest just by making your payment earlier when your credit card issues the average daily balance method to calculate your interest rate. By paying early, you reduce your average daily balance and the amount of interest that accrues, assuming you don't increase your balance and with additional purchases later in the month. Number 6, avoid cash advances. Cash advances have a much higher APR compared to purchases and do not have a grace period for paying your full balance and avoiding interest. So any cash advance you take out starts accruing interest right away. Avoiding cash balances completely allows you to save on credit card interest. Number 7, improve your FICO score. Your credit card interest rate is often based in part on your credit worthiness, which is typically determined by analyzing some information used to calculate your FICO score. By improving your credit, you can qualify for lower credit card rates and a promotional APR offers. Both give you the opportunity to save on credit card interest. Want to increase your credit score? rsrccpayment.com. rsrccpayment.com. If you want to find out what your true FICO scores are, and I get lots of people telling me all the time that they know what their FICO score is, and it's really a credit score. Cleanall3.com. That'll give you your real FICO score. Cleanall3.com. That's going to give you a true FICO score. And I monitor mine. I have a service where I monitor mine and my wife's. I get an update on my phone every time there's some change to my credit report. Doesn't necessarily mean there's a change to the FICO score, but it changed the credit report. So if a balance went up, a balance went down, if there's an inquiry, if there's an account closed, all of those things show up on the report, and I get a notification right to my phone if any of these things happen. And I watch it for both my wife and I because she's out doing things out and about. I'm sitting at my desk a lot of the time, leading a lending team, doing research for a radio show and the like. So cleanall3.com. That is the Borrow Smart segment brought to you by rsrhomeselect.com, rsrhomeselect.com. If you've got enough equity in your property, the whole idea, or the best idea, is to roll up all of your debts into the Home Select product. Why? Because you're going to pay them all off so much quicker, and you're looking at an effective interest rate in most instances. I don't even remember. We just did one yesterday. We did an analysis for a family, and I don't recall the exact numbers. I'll look it up while I'm talking. But, the effective interest rate, they had, I think, a 2.99 was their interest rate. And when we ran the simulator, we don't always know what the simulator is going to say. In fact, we never know what the simulation is going to be. It's just that we look at the simulation and we go in there and we put the number, here it is. You feed the data and you get a return on what the data is. So this one here, not ultra wealthy individuals, but their interest went from a 2.99 is their 30-year fixed rate loan interest. And their effective APR with the Home Select, effective APR. Now remember, the effective APR, we're looking at how long is it going to take to do this. It's got to have number 7 in our list of items that we always want you to understand is discipline. But their effective interest rate on this particular program, 1.062. 1.062 effective interest rate. Yes, it's a 30-year loan. It is adjustable, so it's going down because of interest rates going down. But you tell me, 1.062. And I think we looked in there that the difference in the payoff was going to go from 26 years to, I think it was 4 years and change, something along those lines. I'm not finding it real quick here, but paid off 4.3 years, 25.8 years to 4.3 years. Now you tell me, which way would you rather be, paying your mortgage for 25.8 or going with something that's a little bit out of the box? The banks don't like us to tell you about this, but when you're looking at this one as 4.3 years. So make sure you're taking a look at that program. I think we have time for another Borrow Smart segment. Josh might shoot me. It's not a long one. So we've got Borrow Smart brought to you by rsrhomeselect.com. rsrhomeselect.com. Is buying a house with a sibling a good idea? 5 steps for success. Coming up with the money you need to buy a house can seem out of reach for many people to do alone. According to a recent survey, about half of Americans are willing to split the cost of buying a home with someone else. Buying a home with your sibling may help you pool your resources and get into a nicer home that you can afford alone. But there are a few steps you'll want to take to make sure the experience is a positive one. We'll explore these as well as the pros and cons of co-owning a home with your sibling. Key takeaways. Buying a home with your sibling may help you qualify for a more expensive or nicer home than you could on your own. Each sibling should be open about their financial situation, including their credit score, debt-to-income ratio, and other similar factors. Disagreements in how you maintain or manage the home could potentially cause strain in your relationship. Working with a real estate agent who is familiar with helping siblings and co-borrowers buy homes together could simplify the process. Number one, consider financial options. Take a hard look at your financial situation as a whole. Each of you brings a certain set of circumstances to the table. Your combined and individual finances can make a difference in the type of home you can afford and the types of loans you may qualify for. There are the factors you'll want to consider before you start your search. Your credit scores, your down payment savings, your debt-to-income ratio, your employment history, types of homes you're interested in. Be honest with each other as you have this conversation. This way, you'll know exactly where each of you stands. Number two, choose the best ownership agreement. Get legal advice. If you don't have a good lawyer, give me a call, 800-306-1990. We'll put you in touch with somebody. Whether you're buying a house with a family member or not, you'll want to establish a clear ownership agreement. This outlines what happens to the property if one of you passes away. There are two main ownership options to consider: joint tenancy and tenancy in common. Again, I am not a lawyer. I do not give legal advice. You'll want to make sure that you deal with that. Step 3, consult with a real estate attorney. They can help you protect your interests by making sure ownership agreements and any questions of inheritance are established legally and in a way that works both your needs. Step 4, create an ownership contract to protect both of your interests. You and your sibling want to create a clear ownership contract. At a minimum, you wanted to touch on the following: the ownership agreement, your exit strategy if either of you decides to sell in the future, who is responsible for which payments and in what amounts or percentages, who can inherit the property, how you'll handle life changes like moving to a new state, getting married, having kids. All of these are the considerations that you need to make when you're dealing with this. Just a lot of if you do this stuff up front, it helps. Step 5, find the perfect home. Before you start touring properties, take some time to discuss what you both want the property to have and what you both need in a home. This will depend on your situation. Take your time and come up with a list of wants and needs that you both agree on. Using that list, you can start looking at properties that meet your needs. Consider working with an experienced agent. Once again, I tell you, give me a call, 800-306-1990. I know experienced agents anywhere within the sound of my voice. And as always, I ask, I'm sorry, that's the Borrow Smart segment brought to you by rsrhomeselect.com, rsrhomeselect.com. And as always, I ask at that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
I'd like to call him something. I think I'll just call it a day.